Hello everyone, how's it going? In this video, we're going to talk about Lucid trading under the ticker symbol LCID. It has been one of the most speculated stocks in the Nasdaq. Some have said that it could be the next Tesla, while others believe that it's just going to be a giant bubble about to burst. Lucid is one of the few companies that has an actual product rolled out. And as time went on, the stock price action, along with investors' hope, went through a lot of roller coasters, and some are still wondering if this is a bandwagon that they want to hop on. In this video, we're going to look at Lucid and to see if the stock still deserves to have a place in our portfolio. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links down in the description section, as every help is greatly appreciated. Lucid has been having another difficult session on Tuesday, closing the day at around $7.54, continuing therefore the downward trend that has been going on for more than a year at this point. Ultimately, the market is a game of supply and demands, and I believe that Lucid as a company, if we ignore these short-term supplies and demands, is a company with a lot of potentials, so much so that the buyout rumor has been in the air in just a distant past. The question that we should be asking ourselves instead is whether the future is condemned to be in a parallel universe, just contemplating this world of flying EV cars running on water, maybe. The fact that Lucid has been falling shouldn't come as a surprise, but at the same time, it is something hard to pinpoint, in terms of where the exact reason of this is. It could be because of risk aversion, maybe because people just think that now is not the best time to invest, period. And if that's the case, it's not going to be towards Lucid per se. In fact, it's pretty much the entire EV scene that has been affected at the moment, right? The growth stocks, the Nasdaq, and even the S&P around the world, they're being examined with more, requirements or expectations that they should deliver before they can ask for more money. So, in that case, I would say that we have to be more careful about putting money in now. Not putting money in Lucid being a bad idea, but having a bad timing in investment usually is. So why have people decided to give it a shot? Essentially because people and institutions alike like what Lucid does and believes that it can survive in tomorrow's economy. The stock market reflects our collective expectations of the future before it can start expecting the flying EV cars running on water, though. It first needs to predict whether we can, all of us, or in other words, who can weather the gathering storm ahead of us. Some may be sleeping at the bottom of the ocean with the fishes, right? Others will maybe arrive to the Pirates' Coast. Lucid Motors, also known as Lucid Group, is an EV manufacturer poised to shake up the industry with a cutting-edge technology and its sleek designs. It definitely stands out with its advanced battery technology, designs, and commitment for long-term sustainability. One of the key differentiators is the battery technology. Lucid Air has significantly longer range and faster charging time. Another reason might be where the company is or who created it where that actually matters. So previously, before Lucid became public, many people were saying that the next Tesla might be NIO. However, due to regulatory and also distance issues, I would say that many people were worried that their investments may not have the best oversight. I'm not saying that SEC is perfect, but comparing to something that is right under their nose versus having to travel half the globe in order to find the operations and the market sales and so on, Lucid would present a more safer option compared to NIO. And this is what also prompted many people to focus their attention and, more importantly, their capital on Lucid. If we look at the long-term tendencies of Lucid price action, it's not hard to see that a bubble that gave so much hope back in 2020 now bursted. The market no longer wants to blindly follow the hype, because on one hand, it cannot persist on believing that the bull market, based on purely assumptions, can continue like this. On the other hand, it simply cannot afford to sustain this trend when so many obvious issues, like supply chain issues, doubts on flagship companies, doubts on demand, the end of subsidies in many key markets, the conflicts around the world, and higher interest rates attracting the capital, have been plaguing the financial system as well as the real fundamentals out there. The market has long predicted that there will be a bearish market after such a prolonged bull market, and that most stakeholders believe that it's going to be a rough patch for at least a couple of years. The market peaked twice in the past, and if the first peak was caused by pure hype, the second one was then triggered by the rollout of actual products. Lucid remains one of the more solid companies in the sector and has kept its investment value or potentials for the years to come. The main question in everyone's mind is when should they enter in the stock? The long grind to lower price levels is likely going to continue, or at least the tendency may be there. But when we look at where it might lead the stock to, sometimes they can go to surprising levels. For example, I personally don't consider that Hyliion, another EV truck manufacturer that has also made the headlines back in 2020, deserves the price that it has now. Nevertheless, the sell-off continued for years without an actual reason other than people have lost confidence and or trust and or patience with it. So the same thing could happen with many other players in the EV sector. There is no fundamental phenomenon or reasons to support those sell-offs, but at some point it also doesn't have to matter, because they simply have to believe that there will be no new money to pour in the EV sector for the shareholders to eventually lose hope and trust and patience. In terms of the financials, Lucid had a strong financial performance in 2022. The company reported revenues close to $200 million in Q3 of 2022, which is a significant increase from just above $200,000 in Q3 of 2021. That strong growth was driven mainly by the launch of Lucid Air, the company's first vehicle, which began deliveries in late 2021. Lucid Air is a luxury electric sedan well received by the consumers and also helped the company to establish its reputation as a major player in the sector. Currently, Lucid has a negative net income caused by the fixed costs and other operating expenses that should be absorbed as the volume picks up. Overall, I would say that Lucid's financial figures paint a good picture about the company, but it's also demonstrating that Lucid is lacking a little bit of discipline in terms of cost control. Nevertheless, I would say that in the years to come, they would still focus on growth rather than cost control. Now, let's also talk about the shareholder composition of Lucid, because it is something that it's quite important to determine if the company is better for trading or investing. Lucid is currently held by institutional buyers for the most part, by more than 70% of the total volume. This would suggest that the price volatility may be lower than other stocks held mainly in the hands of retail traders. One key behavioral difference between institutional and retail traders is their horizon. Institutionals tend to have a longer-term view, which focuses on the company's fundamentals and the years to come when it's not the decades to come. They're also less likely to just jump in and out of a share because they can afford to have the loss. The short interest of Lucid has been significant over the past few months. It means that more and more investors have been betting against the company's stock by short selling it. Short sellers borrow shares of the stock and then sell them in the market, hoping to buy them back later, profiting from the difference. As of the recent data, short interest in Lucid represents 7.5% of the company's total shares outstanding. This is a moderate level of short interest, but significant nonetheless. It is important to note that the short interest is not a guarantee for a short squeeze, but it's still a very important metric to monitor because this can tell us what is the current sentiment or the vibe about a stock. It's also worth noting that short sellers very often have actual valid reasons for their bearish sentiment, and that a short squeeze, no matter how likely it seems to be on paper, may never happen. So, my recommendation in this turbulent time is to consider Lucid as a strong candidate on your short list, but right now, take it with some distance. We gotta remember that this has been a meme stock for a long time, and ever since the stock was called CCIV, it is the one that created and busted the 2020 era EV bubble and the EV legend. So overall, I think that we have to move on from the speculation phase to the investment phase. And ultimately, things will look more predictable and smoother from now on. I would recommend to start accumulating shares now and to keep doing that over the next 12 months every time there is a new low or a retrace.